Welcome back, everybody. I'm Connell McShane, filling in for Neil Cavuto on Cavuto Coast to Coast. And we get into these recession fears that are growing in some circles. Behind the scenes, the White House said to be looking into options that might prop up the economy if things do turn south. And our panel's here for the next hour. GraniteShares CEO Will Rhind is here, along with the Wall Street Journal's Bill McGurn and the Democratic strategist Jessica Tarlov. Welcome all.
Thank you.
In advance for helping us through the hours. So, Will, where do you stand on things? Because there's this big debate, and even the president's kind of flip-flopped on what we should do about the economy, on where we are right now. Where are we?
Well, I think things are definitely slowing down. I think that's now kind of, without any kind of doubt. The question is what to do about it.
Right.
We talked about, well, the president's talked about tax cuts. I'm not sure that's going to be something that's going to stick, especially when we've got a deficit that's going to be forecast of $1 trillion next year. So,
as I said last night, the thing nobody talks about, that all the deficits and debt that keep growing, yeah.
Doesn't seem like there's going to be too much appetite to cut taxes at this point, given the size of the deficit.
And the politics. I mean, trying to get a tax cut through, right, Bill, would be...
Right. I don't think a Democratic House is going to give Donald Trump tax cuts that he can campaign on in 2020. I just don't think it's happening.
Jessica might disagree with that. They'd have no problem passing a big tax cut bill, right? If Trump came to them and said, you know what, let's index capital gains to inflation, cut the payroll tax, no problem.
Yeah, that's pretty awesome. When hell freezes over, the Amazon burns, or whatever is going on today. The tax cuts aren't happening, as you mentioned in your introduction. There's been a flip-flop on it. There was talk of the payroll tax, and then yesterday, when he was kind of freestyling for about 40 minutes about, letting Russia back in the G7 and whatever else he was saying, he mentioned that that isn't going to happen.
But I'm sure you think the economy's slowing, right?
I do think that the economy is.
So what should we do about it, if not cut taxes? What should we do about a slow economy right now, do you think? What would be a better idea?
What would be a better idea?
Because the reason I ask, we could talk about it, is because people on your side of the aisle, the Democrats, have been accused to say all they want is for the economy to actually slow, to go into recession. So
I don't think that's fair.
Bill Maher thing.
The candidates that are on the trail right now, none of them echoing what Bill Maher is talking about. I should put that out there, and I don't think that any of us would want that. There are plenty of people who are living paycheck to paycheck who certainly could not live with a recession, or it'd be much harder.
Right.
Democrats are talking about reversing the tax cuts that already went through, that benefited people at the top, that would infuse more money into the economy, into the coffers. I understand the government coffers, to be better distributed. So that is one place that we could start with this. And we're going to talk later in the hour about Bernie Sanders' green plan. We can have...
Well, speaking of debt and deficits...
Yes, but also speaking of more green jobs, and I'm not necessarily advocating for his policy, but to have a better climate plan would certainly be an infusion into the economy, and looking at just reforms across the board.
As you said, we will talk about that. We will get into the Bernie Sanders thing a little later. Bill, let me talk about the Journal, your newspaper, for a moment. Right. On your editorial page this morning with its lead editorial, which basically makes the suggestion to the president, hey, you want to help the economy? Well, let's get going on trade, not just cut a deal with China, but take all the uncertainty out. Forget the auto tariff threats and all the steel and aluminum tariffs.
Right.
That's something he can actually control. Right. I don't know if he'll move in that direction.
Right. Look, we're people who believe that the first part of what Donald Trump did, cutting taxes and deregulating a big part of it, really did unleash the economy in a lot of ways. What the markets hate most is uncertainty, and the trade deal with China is the biggest uncertainty. I lived in Hong Kong for 10 years. China needs a punch in the nose. China cheats at a lot of stuff. But tariffs are not really the way to do it. One way to do it, and that Donald Trump could do, is, I think, revive the Trans-Pacific Partnership. Get other people to join with you to have a freer and fair, more open system.
You have a new name for that, Bill, because there's no way that...
Right.
TPP isn't happening.
But it is the way to do it, and the same goes for Britain. With Britain leaving Brexit, I've long thought what the president should do is put a free trade deal on the table where we treat British goods exactly the same as they treat ours, and then say it's available to anyone who wants it. Right. That's a way to put pressure on people's bad behavior without harming yourself.
It's a good point, because we talk all the time, Will, about giving, whether we should give in or cut a deal with China. But if you just, even if it wasn't called TPP or it wasn't an exact agreement like that, if you had everybody else lined up against China and you weren't threatening them with tariffs, and maybe you start with Boris Johnson or someone, would that help, financial markets, risk assets and all the rest?
I don't think it would hurt them. I think that it's got to be positive, and just we don't know obviously how positive it would be, but I think that could only be helpful to the situation. And
but you think we need to do more? You think
Yes.
we need to do more than that? So it's got to be that goes back to the Fed. Then is the Fed controlling this whole thing? I mean, all these moot point conversations to talk about whether we'll cut taxes a little bit or cut a deal on trade, which may or may not happen. Is it all about the Fed?
Well, it's probably the biggest factor at the moment in terms of markets specifically. So what the president's been advocating for in terms of lower interest rates from the Fed. I mean, that's certainly one policy weapon that they have. And this is a playbook that we've seen many, many times before, including after the financial crisis. I think that, as Bill was saying, also you can look to further deregulation. You can look to the public infrastructure or public spending plans that were talked about but haven't really gotten underway.
Right. How real is the slowdown in everybody's view? If you want to go, Bill, what do you think? I mean, there are people who say the consumers
is real. I'm not sure that you can go from the slowdown to predictions of imminent doom and gloom, but I think there's been some slowdown in investment and exports. Look, again, markets hate uncertainty, and one of the things about tariffs is a lot of people in the United States that sell products that are made in China. So there's huge supply chains. It's a very complex thing. So when you put question marks from, someone can move their plant to, say, Vietnam.
Yeah.
But that's a huge expense. But if it fluctuates, you don't know whether the tariffs are going to stay, whether they're going to be gone. It's very hard to make business decisions, efficient business decisions in that kind of environment, which is why markets sometimes hate uncertainty more than they hate something bad that's clear they can factor in. But if they think the pieces are going to be moved every other day, and you saw that with the president previously, different comments on China trade, whether he says we could reach a deal or not reach a deal, it sends the markets into tizzy sometimes.
Well, there's a great story in the Journal on that topic that people should look it up online and read, because if you want to understand how these things really work, to Bill's point, if you're a company and you're going to move to Vietnam or Cambodia or wherever you're going to move, if you're very small, I guess you could do it tomorrow. But if you're a big company,
takes a lot of planning.
Yeah, not only is it's expensive. And then the other thing that was in the story is that when they go to Vietnam now, say, for example, they're having trouble finding workers.
Right.
I mean, Vietnam's a small country, relatively speaking, compared to China. You know what I mean?
And the infrastructure as well. I mean, and, again, we're talking about, huge multinational global corporations that are, for the most part, if they're U.S. companies, they're applying whatever goods and services to U.S. standards and regulations, and that's not something that every country can fulfill or has the infrastructure or technology to support.
It's kind of an argument for a pause, Jess, in the whole idea. I don't know if you agree with this or not, but if you were saying, hey, the goal here is to get after China, and that's a noble goal, and they are cheating and stealing, that maybe we should acknowledge that it takes a while for everybody to adjust to this. So let's kind of pause and say that we'll agree to something small. Then after the 2020 election, we take it up again. I don't know how the Democrats would react on their side. So.
Well, a lot of Democrats have been enthusiastic, actually, about President Trump, at least in theory, taking on China. This is something Chuck Schumer has been talking about for a long time. It's rare that we get bipartisan agreement, but everyone does think China is obviously gaming us, particularly concerned about intellectual property. And you saw a lot of agreement, certainly, around the initial sanctioning of Huawei, which went away pretty quickly there. But going back to what Bill was talking about the tariffs, I'm only going about the recession reports that I've read. Morgan Stanley, Goldman Sachs putting the likelihood about 30 to 33% there. But the CBO released their report saying that the average American household was losing, I think, $580 per annum as a result of the tariffs. And I believe the Morgan Stanley report even got up to $1,000. So if you're looking
to the point about odds, the CBO did not predict a recession, just predicted a slowdown, slower growth. But
still a tax on Americans. And the administration has been making the argument over and over, Larry Kudlow, Peter Navarro, that this is not hurting Americans. All the data shows that it is, and it is a tax on Americans. I think the president's
actually changed this week on that, which I find fascinating.
Right.
I mean, he stopped saying that suddenly. He stopped saying that China's going to pay the tariffs. He started now saying a little bit, Bill, that, you know what, it might hurt short term, but forget it, it's worth it.
I mean,
well, he did that to the farmers. He said that from the get-go with farmers, at least. He said, they're with me. They know that this is a long-term play. It'll hurt up front, but...
The president gives contradictory statements on trade. Sometimes he says, all I want is for other countries to treat us the same as we treat them. That's a reason. But sometimes he gives the sense that he wants to reshape the American economy, we want to promote manufacturing and rig the system in a way or protect our manufacturers. So he gives different signals on this. Look, the biggest problem, the fundamental problem in all of this is countries often cheat and do things that are wrong. No one has found a way to punish those countries through government action without exacting often a higher cost on yourself. Remember, President Bush, whom I work for, put in steel tariffs and had to withdraw them
Took
because
them off
there were
quick.
hundreds of thousands of jobs that were put at risk at home of people who use steel.
Right.
There was just an example of a steelmaker that was opening a new plant in, I can't remember, it was either Pennsylvania or Ohio, right on the border there. And they had supported the president's tariffs on steel.
Of course.
Now they're suing the Commerce Department because they didn't get the exemption they said they needed to get some steel from India and Mexico.
It's complicated.
Right?
It is complicated.